Bitcoin plunged nearly 30% from its all-time high, and I'll admit, I felt that wave of panic wash over me. One day we were celebrating a record around $126,000, and just weeks later, it crashed to about $80,000. In total, over $1.2 trillion of crypto market value evaporated within 6 weeks. It was like watching a tsunami pull back, uncertain if a bigger wave was coming. But here's the crazy part. As I dug through Bitcoin's history, I found a hidden pattern that flipped my fear into cautious optimism. Could this gut-wrenching drop actually be the start of something big? Maybe even Bitcoin's next mega rally? Stick with me, because what I discovered might surprise you. Let me take you back a bit. This isn't the first time Bitcoin has given investors a heart attack. Far from it. In fact, these kinds of drops are almost a rite of passage in every Bitcoin bull run. I had to remind myself of that as I stared at the charts in disbelief. Think about 2017. During that epic bull run, Bitcoin didn't just go straight up. It crashed around 40%, not once but twice that year, before surging to a new record high in December. Anyone remember the China ICO ban jitters? Even after a late year 29% plunge, Bitcoin still hit a fresh peak weeks later. Then 2021, talk about drama. Bitcoin fell over 31% in January and another 26% in February of 2021, shaking out a lot of newcomers, only to roar back. We even saw an eye-watering 55% collapse between April and June when China outright banned Bitcoin mining. It felt like the sky was falling, miners shut down, fear was off the charts. Yet by November 2021, Bitcoin still rallied to a new all-time high. In hindsight, those scary mid-cycle crashes were just part of the journey upwards. Now zoom in on the current cycle. Believe it or not, we've already lived through a couple of steep drops recently. From March to August 2024, Bitcoin pulled back about 32.7%, and then from January to April 2025, it sank roughly 31.7%. Each time people screamed that the bull run was over. Each time Bitcoin found a footing and climbed higher afterward. So when I saw this latest approximately 30% plunge, I had a deja vu moment. Haven't we been here before? It turns out history was whispering a clue. Data confirms that drops in the 30 to 40% range are normal in Bitcoin bull markets. Volatile? Absolutely. But volatility of this magnitude appears consistent with long-term trends, as one analyst, Jacob Joseph, pointed out. In other words, Bitcoin's wild swings are a feature, not a bug. Every cycle has its gut check moments to shake out the excess. So I started to see this 30% crash in a new light as a stress test that Bitcoin has passed time and again. It's almost like Bitcoin saying, all right, let's see who really has conviction. And those who held on in past cycles were rewarded with new highs when the dust settled. History doesn't guarantee the future, but it often rhymes. At this point, I wasn't breathing into a paper bag anymore. In fact, a part of me thought, could this crash actually be setting us up for another run? It's a bit contrarian. Most people were filled with fear, but the more I dug, the more evidence I found to back it up. Now, don't get me wrong, I'm not saying the crash itself was fun. October 10th felt like a crypto apocalypse for a lot of traders. Over 1.6 million traders saw their positions liquidated in just 24 hours, erasing about $19.37 billion worth of leveraged bets. It was the single largest wipeout of leveraged crypto positions ever recorded. That's right. The biggest one-day crypto liquidation in history. No wonder the price plunged so fast. It was a cascade of margin calls and auto sell orders like dominoes falling. This wasn't just my observation. Lucy Gazmararian, founder of Token Bay Capital, noted that this was one of the largest forced liquidation events ever, and its ripple effects would take weeks to play out. When the smoke cleared, Bitcoin and Ethereum were still down about 10 to 12% from their pre-crash levels, and a lot of smaller altcoins were absolutely wrecked. It's like a forest fire that burns down the weak trees. Scary, yes, but it clears the way for stronger growth afterward. Lucy also mentioned something else important. This liquidation tsunami hit right when people were already nervous that the bull run might be ending. Imagine the timing. Sentiment was on a knife's edge. In past cycles, the official end of a bull market, the start of a brutal crypto winter, saw prices drop 70 to 80% from the top. So with this crash, a new fear set in. Is this it? Are we heading into another 80% collapse? That question has been hanging in the air ever since. And trust me, I feel that concern. Nobody wants to round trip their gains and end up back at square one. The difference this time is, so far we've only fallen about 30% from the peak, not 80%. Bitcoin is still holding around the mid $90,000 as I speak, which is miles above an 80% drawdown level. So the worst case scenario fears haven't materialized, at least not yet. This leaves us at a crossroads. Was that plunge just a nasty but necessary correction within an ongoing bull market, or the start of a deeper bear market to come? Before I dive into what's happening under the hood with Bitcoin and where it could go next, let me just pause for a second. I want to make something absolutely clear. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. All right, glad we got that out of the way. Now let's play crypto detective and examine the evidence for what might lie ahead. Despite the recent chaos, when I look under the hood, I see signs that this time might actually be different. In a good way. It's like after a bad storm, you notice the foundations of the house are still solid. So what are those foundations for Bitcoin right now? One, liquidity is coming back. Global markets are shifting. Many major central banks have either stopped raising interest rates or are about to start cutting them as we head into 2026. Inflation is cooling off. Economies are slowing. The stage is set for easier monetary policy. Historically, when money gets cheaper and more abundant, Bitcoin tends to do well. Why? Because investors aren't as worried about earning interest elsewhere. The opportunity cost of holding Bitcoin, which doesn't yield anything by itself, goes down. In plain English, when the money taps are on, some of that water flows into crypto. Over the last year, we also saw something unprecedented. Bitcoin spot ETFs were finally approved, and over $50 billion poured into those Bitcoin investment funds. Even with the recent turmoil, those ETFs haven't seen mass outflows. The big money didn't run for the exits this time. That's a stark contrast to earlier cycles when institutions would dump holdings at the first hint of trouble. It tells me that a lot of investors now view Bitcoin as a long-term asset, not just a quick trade. We have public companies like MicroStrategy still hodling approximately 430,000 BTC. Insane, I know, and even raising more cash to potentially buy more. They've essentially become a backstop in the market, a huge whale that's not inclined to sell. In fact, if certain stock index rules change in January and companies like MicroStrategy remain in major indices, it could force more institutional buying. The structure of the market is more robust than before, with these long-term players in the mix. Two, supply is getting tighter. Remember, we had a halving in 2024. That's when the new supply of Bitcoin getting mined every 10 minutes was cut in half. Miners now earn 50% fewer BTC for their work, which means less new Bitcoin flooding the market. This has real effects. A lot of miners, especially smaller operations, had to scale back or consolidate because their revenue was slashed. We're hearing that exchange reserves, the amount of Bitcoin sitting on exchanges ready to be traded, are at their lowest level since 2018. Think about that. People are not keeping coins on exchanges. They're holding in private wallets, in long term storage, in ETFs and corporate treasuries. That means fewer coins available for sudden selling and also fewer coins available to buy without moving the price. The active circulating supply is shrinking. It's not a dramatic supply shock yet, but all the ingredients are there for one. If demand kicks up even a little, there's not a ton of loose Bitcoin available to satisfy it, and that tends to push prices up. 3. Sentiment and demand, cautious but present. We talked about ETF inflows and big holders staying strong. We should also talk about the average investor. Sentiment took a hit with this crash, no doubt. A lot of people are cautious now, maybe too cautious. Paradoxically, that's often when markets can rise. When everyone expects the worst, a bit of good news can spark a rally. We saw a smaller version of this recently. Bitcoin bounced from approximately $80,000 back into the $90,000 plus range relatively quickly once the forced selling ended. It's recovering, but slowly. That slow grind up without the euphoria actually makes me more confident. It means we might be building a base instead of a bubble. Wall Street forecasts are all over the map, but many serious analysts have year-end or cycle peak targets in the $120,000 to $170,000 range for Bitcoin. These aren't just moonboys on Twitter. This includes models from places like JP Morgan, which compares Bitcoin to gold and gets numbers like approximately $170,000 if the trends continue. Fundstrat, always on the optimistic end, even tossed out a number as high as $400,000. I take that with a grain of salt, but the point is, multiple analysts see room above the prior $126,000 high. And interestingly, few are calling for a blow-off top mania. Instead, they expect to grind upward, steady incremental gains. That's the kind of environment where Bitcoin quietly makes new highs while many people are still hesitant to believe it. At this stage, with all this evidence, I'm leaning toward the idea that Bitcoin is still in a bullish structure. It weathered a hellish storm, and the foundation is intact, maybe even stronger. But I have to address the other side of the coin because there is a credible bearish case too. Before I talk about the bearish scenario, I want to share a quick personal discovery that had me excited recently. In the middle of all this turmoil, I've been exploring ways to strengthen my position and earn passive income in crypto because, hey, if you're in for the long haul, might as well have your crypto working for you. That's how I stumbled upon Unity Nodes, a project by World Mobile and the Minutes Network that's been making some buzz. Now, Unity isn't the main focus today, but it's a cool concept that caught my attention. Think of it like this. They've created a system where smartphones can act as mini crypto nodes, contributing to a decentralized network. It's not some overhyped NFT fad or anything. It's essentially a software license that lets you run a node on mobile devices. I actually went ahead and purchased a Unity node license. Technically, it's an NFT token, but really it's a software access license that came with 200 licenses bundled. Am I going to deploy 200 phones tomorrow? No, I'm starting small. I plan to test with about 10 phones first to see how it all works out. If it's successful, I'll scale up gradually. What's intriguing is that by running these nodes, I'll earn rewards and I can choose to get paid in BTC, ETH, ADA, or XRP, some of my favorite long-term cryptos. In a way, it's like staking or mining, but through providing network coverage with mobile nodes. A pretty innovative form of passive crypto income, right? I want to be clear, I'm not shilling this. It's something I'm personally experimenting with. The concept of Unity nodes shouldn't be completely new to many of you, since I've mentioned Unity in past videos, but this is the first time I'm actually diving in as a participant. Of course, like anything, there are risks and unknowns. Maybe the rewards won't be as high as expected, or the system might face challenges. That's why I'm testing the waters first. Do your own research if it piques your interest. I'll put a link in the description to Unity's light paper and their rewards calculator so you can read up on it yourself. For me, it's a way to potentially accumulate more crypto on the side, independently of price swings, which feels especially rewarding after surviving a 30% price drop. All right, back to the big picture. I just wanted to share that because finding a new project like Unity, something with real world integration, reminds me that innovation in crypto doesn't stop just because prices are down. In fact, that's often when some of the coolest stuff is born. So, where does that leave us with Bitcoin's future? I see two paths from here. Almost like a choose your own adventure book. The bullish path says the worst is behind us, the excess leverage is gone, flushed out by that historic liquidation event. Strong hands are in control, and all those fundamentals, tightening supply, returning liquidity, institutional support, will carry Bitcoin to new heights over the next year. Maybe we grind back to the old high $126,000 and then push beyond, hitting those forecasted targets in the $150,000 range, or even higher if something crazy happens, like a surge of new adoption or another wave of ETF buying. This scenario is basically the continuation of the bull cycle into 2026, with perhaps a calmer, more stable climb. Relatively speaking, it's still crypto, it's never truly calm. However, there's the bearish path to consider. If I put on my skeptic hat and even consult some technical analysis folks, they'd argue that Bitcoin might have already peaked for this cycle. One Elliott Wave analyst I came across described it like this: Bitcoin ran up in a 5-wave rally from the 2022 low around $16,500 to the 2025 high of approximately $126,000. If that pattern is correct, then this recent drop could be the start of a larger correction, not just a blip. In Elliott wave terms, we'd be in the ABC corrective phase. We had the first drop, A taking us under $108,000, maybe a weak bounce B might follow, and then a deeper slump C potentially dragging us down further into mid-2026. The key support levels the bears are watching around $84,000, then $70,000, and even down to $58,000 in the worst case. Those happen to be areas where previous cycles found support. Interestingly enough, so the idea is Bitcoin might chop downwards or sideways for a good part of 2026, testing patience and shaking out any remaining weak hands before the next true bull phase kicks off, perhaps around the next halving in 2028. If we follow 4-year cycle logic, which scenario do I think will play out? Honestly, it might be a bit of both. I know that sounds like I'm hedging, and I am, because nobody knows the future. We could see Bitcoin regain momentum and even break that $126,000 high in 2026 if the stars align. Strong liquidity, no major black swan events, continued adoption. But I'm also mentally prepared for a scenario where Bitcoin doesn't make a new high so soon and instead consolidates or dips further. Here's the thing, either way, I'm not throwing in the towel. Whether we get a mega rally or a slow bleed, I have a plan, and having a plan is crucial in crypto. Surviving and thriving in crypto isn't just about picking the right coins, it's about risk management and preparation. This recent crash was a blunt reminder of that. So let me share what I'm doing to stay safe and ready no matter what happens. First, I make sure I'm not overexposed on any single exchange. We learned the hard way with events like FTX that even big exchanges can go down in flames. Plus, during high volatility events, some exchanges just freeze up or go offline. I never want to be stuck in a situation where I need to trade or withdraw but can't because my only exchange is down or has locked me out. That's why I spread my funds across multiple exchanges. You could call it my plan A, plan B, and plan C. I've already signed up and completed KYC on several reputable exchanges ahead of time. You never know when you'll need access to an exchange on short notice. And the last place you want to be is waiting for approval while the market is moving. If you haven't done this, I highly recommend having at least a couple of exchange accounts ready to go. If one exchange has issues, you have a backup on my website, link in the description. I've listed all the exchanges I use, and yes, those links are affiliate links. Using them is completely optional, but if you do, it helps support the channel. I earn a small commission at no extra cost to you, so a big thank you if you use those. The bottom line, diversify your exchange risk. It's a simple step that can save you a ton of stress in a crunch. Second, let's talk about protecting your crypto stash. A lot of folks learned a harsh lesson not long ago. Not your keys, not your coins. If you leave your Bitcoin or any crypto on an exchange, you're essentially trusting a third party with your assets. And if that exchange gets hacked or collapses, your coins could vanish. I sleep much better at night knowing that the majority of my crypto is stored securely on a hardware wallet. Personally, I use a ledger device. It's a little gadget that keeps your private keys offline and safe from online attacks. When you want to send crypto, you physically confirm the transaction on the device. It adds a few seconds, but that's a trade-off I'll happily take for security. A quick pro tip, if you're going to buy a hardware wallet like Ledger or Trezor or any brand, always buy directly from the manufacturer or an official retailer. Don't go ordering one off eBay or some third-party Amazon seller because there have been scams where people sell tampered devices. I have a link on my website that goes straight to Ledger's official store. It is an affiliate link, which means if you purchase through it, it supports the channel. But more importantly, it ensures you're getting a genuine device from the source. However you do it, please make securing your crypto a priority. It's one of those things that seems like a hassle until the day it saves your behind. Third, education and community. Going through wild markets like this, I can't stress how important it is to keep learning and to surround yourself with a good community. Some of you might know I run an online crypto school over at cheekyschool.com. I've put together courses on trading, portfolio management, and risk management distilled from years of my own experience and mistakes. If you're serious about leveling up your crypto game, consider checking it out. There's a link in the description, and you can use the discount code YT50 off for 50% off any course as a thank you for being a viewer. Those courses are there to give you the tools to make informed decisions and not fall for common pitfalls. If formal courses aren't your thing, no worries. We have an awesome free Discord community, link in the description as well, with thousands of members. It's a great place to ask questions, share insights, or just commiserate on tough days. I'm in there often, and so are many seasoned traders and analysts. Crypto moves fast, and having a community to navigate it with can make a world of difference. Plus, it's free knowledge and camaraderie. Who doesn't want that? When I step back and look at this whole story, the 30% crash, the history, the data, the fear, and the hope, one thought sticks with me. This is the game we signed up for. Bitcoin will test you, it will scare you, shake you, and make you question everything. And just when you're about to give up, it can turn around and reward the ones who kept the faith and kept their homework up to date. This recent drop might very well be one of those tests. It was brutal, yes, but also cleansing. It purged a lot of greed and leverage, and now the market that's left standing is, in many ways, healthier. Could prices go lower from here? It's possible. I'm prepared if they do, but I also see a very real chance that this was the final big scare before an even greater rally. I've shared the evidence, both bullish and bearish. I've shared what I'm doing personally to stay safe and capitalize on opportunities like Unity nodes and other strategies. Now, it's up to each of us to decide what to do with this information. Through all the ups and downs, my conviction in Bitcoin's long-term story hasn't wavered. If anything, seeing it weather storm after storm, from China bans to trillion-dollar wipeouts, and come back stronger gives me more confidence. Bitcoin has an uncanny way of rising from its own ashes. Every cycle, it brings in more people, more innovation, and more resilience. So ask yourself, when the next chapter of this story is written, do you want to be someone who got shaken out, or someone who stuck around and learned and maybe even thrived? For me, the choice is clear. I'm sticking around with eyes wide open and plans A, B, and C in place, ready for whatever comes next. Oh, and one more thing. If you found this deep dive helpful or at least thought-provoking, make sure to join us on this journey. Subscribe for more insights and stories, and until next time, stay safe and stay savvy. I'll see you in the next video.